So recording has started. What days are the stream on? What times? Okay, so it's gonna start at 12:30 p.m. Eastern time. Okay. I don't know whatever that time is gonna be in your local time, but it's gonna be 12:30 EST. Okay. And there are gonna be 3 streams per week. It will be Monday, Tuesday, and Wednesday. Okay. So yeah, and if there are any time changes in the time, I will notify you all before that. Okay. So please keep an eye on the announcement section so that you don't miss anything. Okay. Okay. So uh, let's start with what we are gonna learn today. So basically, first we are gonna go over the very basics of ICT because some of you might not know. Okay. And then we'll go over what PD arrays are. We are going to go over some important level of liquidities and a little basics of order flow. All right, so this is what we are going to cover today. All right, so yeah, I'm going to start after 1 minute. Okay, I will ping everyone one more time. Okay, so everyone know. And if you have any questions, okay, you can ask me in the chat. And make sure that there's going to be written a 2, and in front of that there is either going to be written everyone or somewhere else's name. So you have to make sure to make it to everyone, because if you select anyone else, your chat is only going to be shown to that person. So make sure that it's at everyone, okay, so that I can see it. You will be sending the DMs. I haven't shared the screen yet, so I'm gonna do it now. Okay. All right. So, is the screen visible? All right. Cool. So, and one more thing. Now I'm gonna go over the very basics of ICT. So if you already know these things. Um, I'm sorry, I have to repeat this because there might be someone who still don't know it. So I guess it will be better to clear this up. Okay. All right. So let's go over what ICT is based on and the very basics of ICT. Okay. So ICT is based on liquidity and time. Okay. What's liquidity? Okay. Liquidity, where liquidity rests. This is what I'm gonna go over. So now you know the classic web tradings, those patterns. Okay, those patterns like these and those support resistances, etc. Right? So you know them. Okay. Then there are these kind of patterns, etc. Okay, so these are like the classic web trading, also known as the retail trading concepts. Okay, we all are retail traders, but it's just that we just trade different with the different concepts. Okay, that's what the difference between us and them. Rest, we are all retails. Okay, so they have these concepts, these patterns, these support resistance. So according to them, when there is a strong support, for example, there is a support like this. Okay, they're gonna uh, they're gonna they're gonna say that this is a strong support. Okay, and they will trust their stop losses right here. So if they are going long, okay, they will have their stop losses at this low. Okay, they'll have their stop losses at this low, and they will target higher, whatever their target is going to be. So what the market really is going to do is that it's going to come lower to take out these stops. Okay, it's going to take out these stops, and then it will go higher. Okay, bro, you are actually drawing on the screen. So white dragon, please remove that. there's a drawing on the screen. Okay, all right, so that's how the logic is. Okay, so they're gonna have these lows and highs, and they're gonna trust their stop losses. They are gonna have their stop losses at those highs and lows. So for example, there is a low like this. Okay, it's okay, bro. So if they are going long, okay, they will have their stop losses right here. And if they are going short, they're gonna have their stop losses right here. This means that this is actually a level of liquidity. There's gonna be liquidity right here. Okay, there's gonna be buy stops or sell stops right here. So there's gonna be sell stops and there's gonna be buy stops. What we actually are gonna do is that we are gonna trade this liquidity. So when the retail guys, okay, when the retail concept traders, they they are they are taken out of the market. So for example, they are short right here, and we are also expecting lower prices. All we have to do is to wait for their stop losses to be taken out. And once that happens, this is where we are going to look for some selling. Okay, that's where we are going to look for our sell positions. Okay, we will not place our stop losses blindly at any high or low, because every high or low is not going to be protected by the market. So this was like what ICT is completely based on. Okay, it's all about liquidity, it's all about the stop losses at the highs and the lows. Then there are PD arrays, okay, premium discount arrays. Okay, so first of all, let me talk about what what premium is and what discount is. So when there is a price range, for example, this is the range from this top to this low right here. So whatever is between this, okay, so from here to here, the 0.5 level is actually the equilibrium. Okay, and whatever is above the equilibrium point is premium, and whatever is below the equilibrium point is discount. Okay, so now I hope the discount and premium is clear. Now let's talk about premium and discount arrays, or PD arrays. Okay, so there are some signatures which, according to ICT, the market or the algorithm refers to. Okay, it includes order blocks, fair value gaps, and breaker blocks, and there are a lot, but I'm not going to go over every single one of them, and you actually don't need to learn every single one of them. Okay, in trading, less is more. Actually, you don't need to have a lot of knowledge to be profitable. Indeed, it's the very opposite. If you try to learn a lot of stuff, you're going to get confused and won't be able to trade. So I'm going to go over what I use in my trading. Okay, so the first thing is an order block. Okay, so what's an order block? uh, an up close candle or a series of up close candle before a big down movement is an bearish order block. For example, right here, look at these three candles right here. Okay, these are three bullish candles, and after that there is a big down movement. So now this means that it is an bearish order block. Now technically price should get into these order blocks, and then price should reject lower, and we can see it right here as well. So price goes lower, then it goes up to this order block, and then rejects lower, right? What is a bullish order block? A bullish order block is actually a down close candle or a series of down close candle before an up movement. For example, right here. So this is a down close candle, and after that, price went up. Now you can clearly see that after price went up, price got back into this order block right here and then went up. And if that's not pretty clear, we can see it right here as well. So price came down, then got into this order block and then went higher. Okay, now the next thing is actually an fair value gap. So basically a fair value gap is a pattern that's formed in three candles. So it's actually the gaps between the wicks of the first candle and the third candle. For example, right here. So we have this candle wick low, and we have this candle wick high, and the gap between these two wicks are actually a fair value gap. Okay, so this is a bearish fair value gap. Okay, and we can see an example of a bullish fair value gap right here. Now I know a lot of you well know these stuff, but I just have to repeat. Okay, so please stay tuned. There are going to be new stuff as well. Okay, so this is we'll remove this one right here. Okay, so it's first candle, it's wick high, and the third candle, it's wick low. There is a huge gap between this. Okay, it doesn't have to be huge. Okay, it doesn't matter. So as long as there is a gap, it will be called a fair value gap. Okay, so you can see that this is what a fair value gap is. Now, bullish fair value gap should support price, the actual support. For example, it created this fair value gap right here. Price went down into this fair value gap, and then you can clearly see that it went higher after that. Okay, an example of a bearish fair value gap can also be seen right here. Okay, you can see there's this low, there's this candle high. If we look at this right here, you can kind of see that price made a fair value gap, a bearish fair value gap. Price went into it and rejected low, even though the next candle was went higher, but still, I mean, it gave resistance to the price. Okay, you can see examples here as well. Right here, price went lower, here as well, and right here as well. Okay, this is a fair value gap. Now I will go over a breaker block, and then I will go into a bit advanced stuff. Okay, now what's a breaker block? So now you have learned what an order block is. Okay, so now actually a failed order block is a breaker block. So for example, right here, there's going to be a breaker, an order block right here. There's going to be series of down close candles, right? When price goes up, now when price come back into this order block, technically price should go higher. But if it fails to support price and it moves lower than this, okay, it breaches this, that means that now this order block is going to turn into a breaker block and it will resist price. The same thing goes for bullish order block. So this was a bearish order block. This will be the same for a bullish order block as well. Okay, so now let's find some examples out of it. Okay, of it. This right here, you can kind of see. So this was like an order block, right? Because this is series of down close candles. These are series of down close candles followed by an up move. Now, technically, price should get support from here, but it doesn't. So if I extend this out, you can see that price went lower than this, and then in this candle, it retraces back into it and then moves lower. Now, these don't work 100% of the time. They sometimes fail as well. So you shouldn't expect 100% of accuracy or something like that. Okay, they can fail as well. Okay, it's not that they are always gonna work. For example, this fair value gap right here. Look at this. This is a bullish fair value gap. It gives support right here, but then price doesn't get support from here, and it is actually breached. Okay, so these were like the basic ICT PD arrays. I talked about the very basic of ICT, like what liquidity is and what these PD arrays are. Let me know if it's clear. If it's clear, then we can move on. I'll take a water, and yeah, let me know if it's clear. Okay, so it's clear. Now we will move into, now you know that at every high or low there are going to be stop losses, right? There are going to be buy stops or sell stops. There's going to be liquidity at a high or low. For example, we have this low right here, we have this low, we have this low. This is going to have sell stops. These are going to have sell stops. We have this high, this high, this high. This is going to have buy stops. Okay, so every high and low are going to have stop losses. What do you consider high time frame? 15 minute or higher? Now it depends. So if you're looking at an M1 chart, okay, then your high time frame will be M15. If you are looking at M15 chart, then your high time frame will be 4-hour chart. I will go over this in detail, and I'll tell you this confusion will later in the classes be clear. Okay, so I'm gonna go detailed on this. Okay, what you should consider your high time frame and low time frame. Okay, so now there are these highs and lows, but not every high and every low has the same significance. Okay, they are not equal. They don't have the same kind of liquidity. Now I'll explain. Okay, what is a buy stop? What is a sell stop? Okay, so when you buy, okay, when you buy a stop, you have bought this thing at this price. When your stop loss is hit, it basically means that you sold what you have bought right here. So this stop loss right here is actually a sell stop. And when you sell something, for example, you sell something right here, you sold it right here, this is going to be your stop loss. So you sold right here. Now when your stop loss is triggered, that means that you bought what you sold right here. Okay, so it's a buy stop. So actually you buy back what you sold right here. And in a buy position, you actually sell what you bought right here. So this is what buy stop and sell stop is. Okay, so now I'll go over some important level of liquidity and some significant highs and lows. Okay, so first of all, we are going to have session highs and lows. Okay, I will write them up. All right, so these are actually some important highs and lows. So what's a session? Okay, I'll go over sessions in detail, okay, this week, okay. But for now, you should know that ICT concepts are linked with time. You probably know that, okay. There are some sessions. There is an Asia session, there is the London session, there is a New York session, New York AM session, and then there is New York PM session, there is London close session, and then NYPM session is for indices, okay. So these are sessions and they have specific timings. For example, Asia session, it starts at 8 p.m. Eastern time and it ends at the midnight. So what I mean from previous session highs and lows. So let's say we have these sessions right here, okay. This is Asia session, then London session begins right here and ends right here. Then let's say NY session begins right here and ends here, okay. So now the market is gonna have some specific highs and lows, okay. Now in this period of time, okay, in this Asia session, there's gonna be a high and then there's gonna be a low. And when we are trading in the London session, so now this is out of the session price action, now the London session begins right here. So now we are in London session. So what is our previous session? Our previous session is Asia. So Asian highs and lows are very significant. So in case you are expecting lower prices, you can expect the market to take out these highs because this is going to have a lot of buy stops or sell stops, okay? So you can expect, if you are bearish, you can expect the market to run these highs out and then reject lower. And if you are bullish, you can expect the market to run lower to take out these sell stops and then run higher, okay? If you are trading in the NY session right here, for example, now here, the NY session begins, okay? So this is the London session high, London session low. Now these highs and lows becomes irrelevant, okay? Now you have to focus on the previous session. So in Asia session, our previous session is London session. So the highs and lows of London sessions are now more important than Asian highs and lows. Now the Asian highs and lows have no significance right now, okay? So now price, if you are expecting bearish prices, you expect the market to take out a high and then run lower. If you are bullish, then you can expect the market to run lows and then move higher. Okay, so you can actually end this right here, this Asian highs and lows. You can build a whole model on this thing right here. This happens a lot of the time, and I'll show you examples right now as well. Okay, but first let me explain previous days highs and lows. Now you learned about previous session highs and lows and that it has significance. Okay, so these are like important levels. Okay, now right here the next one is previous days highs and lows. Okay, so previous days highs and lows means that, let's say it's Tuesday right now, so our previous day is actually Monday. Okay, and I forgot to add one thing. Okay, Monday's highs and lows, these are also significant. Okay, so if you are trading in on Tuesday, let's say it's Tuesday, so our previous day is going to be Monday. So the high that is put in Monday, for example, this is Monday price action. Okay, so this is Monday's high and this is Monday's low, and we are now, let's say this is Tuesday. Now Tuesday begins, so our previous day's high and low is actually this Monday high and Monday low. So if we are bullish, we can expect the market to manipulate lower and take out these lows, these previous day's lows, and then move higher. And if we are bearish, we can expect the market to take out these highs, these previous day's highs, and then run lower. Okay, the same, we can say the same for Monday. Sometimes the market is not gonna take out Monday high and low on Tuesday. Sometimes still gonna be like this. So sometimes the Tuesday is gonna be in consolidation. So now let's say it's Wednesday right now. Okay, and the Monday low and the Monday high isn't taken yet. So now we can use the Monday's highs and lows as our significant level of liquidity. Okay, so a price takes out Monday's lows and then move higher. Okay, if it takes out lows and we are expecting bullish prices, we can expect now the market to run higher. Okay, and if we expect bearish prices, okay, we can expect the market then to run out the Monday's highs and then move lower towards the Monday's lows and expand lower. Okay, the same goes for previous week's highs and lows. Okay, it's the same as it's the same as Monday's highs and lows and previous days and previous session highs and lows. So let's say this is the first week of August and this is the second week of August. So if we are bearish, we can expect the market to run out the buy stops of the previous week's high, okay, and then move lower. If we are bullish, we can expect the market to take out the previous week's low and then expand higher. Okay, now let's get into examples of these things. I will open up the examples. Right now, you can see these images on the screen right now. Okay, wait, I minimize the chat. Okay, so you can see that this is a high and this is a low. Now this isn't an ordinary high or low. This is the M15 chart on the Euro USD, and this is the Asian session high and this is the Asian session low. You can see the time right here, it's 8 p.m. This is the highest high in between 8 p.m. and the midnight, and this is the lowest low in that time. Okay, so now you can see that after 2 a.m., as I said, if you are bullish, you can expect the market to run out the Asian lows and then move higher. And you can see right now, this is the 2 a.m. opening time. Okay, 2 a.m. price. Okay, this 2 a.m. price runs lower to manipulate lower. Okay, it takes out the Asian lows and then it continues higher after that. Then we have another example right here. So this is an Asian high and this is Asian low. Now this is the opening time right now. Price goes up to take out the highs and then it moves lower. Okay. This is another example. Now one more thing, okay? Whatever I'm gonna teach you, okay, it's gonna be for every market, okay? It's gonna be for every except for crypto, okay? I haven't tested these things out on crypto, so I can't really say if it's gonna work or not. So I haven't really tested these things, but for currencies, okay, for forex, for indices, these things are gonna work, okay? And I have tested these things out on gold and oil, etc. as well, okay? So they actually work. And one more thing, whatever I'm gonna teach in this mentorship is gonna be for every single time frame. So if I say that, if I explain some pattern, okay, it's gonna happen on any time frame. If you open the 1 minute chart, 15-minute chart, 1 hour chart, weekly chart, whatever chart you wanna open, price is literally the same on every single time frame. If you believe on the algorithmic theory that price is run by an algorithm, then you must believe that price is the same on every single time frame. Okay, it's literally the same. There's no difference at all. Okay, so for example, if someone shows you an image like this, a screenshot like this, without this time right now, okay, this time frame, would you be able to tell which time frame is that? You definitely wouldn't be, because price is literally the same. It's not that on the daily it's different and on the weekly it's different. So it's literally the same. So whatever I'm going to teach, it's going to work on every time frame. Okay, so now right here, this is 8 p.m., right? Then this is the low between that 8 p.m. to midnight, and this is the high. After 2 a.m. right here, this is the 2 a.m. time, price runs lower, takes out this low right here, and now then targets the Asian high. Okay, this is example of previous sessions highs and lows. Now right here, this is these are examples of previous days highs and lows. So now this is the new day. It starts right here. Okay, this is the high of the new day of the previous day, and this is the low of the previous day. Price continues higher even in the Asia session. Then at NY session, price price takes out these stops and then move lower. Okay, so you can see how price manipulated above the previous day's highs and then targeted the previous day's low. Now remember, you have to pair these things up with your bias. You don't have to treat them with as a pattern. Okay, you have to pair them with a bias. Okay, without bias, all of these things are literally useless. And don't worry, I'm actually going to teach you how to know where price is going to head over. Okay, so you don't have to worry about that. There's another example right here. Price takes out previous day's highs right now, right here. So you can kind of see the manipulation right here, and then it runs lower towards the previous day's lows. Here is an example of previous week's highs and lows. This previous week, this is the previous week high, this is the previous week low. Price moves lower, okay, to manipulate right here, and then it targets this previous week's highs right here. So now, let me know if you got any questions. So if this is clear, then we can move on to our next topic, which is order flow. Okay. Let me know if that's clear. How do you expect? Okay. Uh, now, you in this mentorship, you will see I'm gonna explain them how you can expect higher prices, how you can expect lower prices. So, and to be honest, like the main focus of this mentorship is to make you able to read price and know where it is heading. So in the coming lessons, I will slowly teach you how to expect where the market is gonna head. Even now, in this lesson, there's a topic which is order flow. It can tell you where the price might go. Okay, so every day we have to prepare right. What our previous high or low? I'm not getting it. Can you please elaborate a little? So now I'm telling you, okay? Now you might not have to use all of these session highs or these liquidity pools, okay? These are actually liquidity pools. It's called liquidity pools, okay? Because it has a lot of liquidity, okay? This is why it's called liquidity pools. So you don't have to. Some people, they just use the session highs and lows. For example, this can be your trading model. You can wait for price to take out a low, and then, I mean the Asian low, and then you can buy after market structure shift or anything like that, okay? And if you are bearish, you can wait for the market to take out Asian high, and then wait for like a market structure shift or something like that, and then you can sell there. This can be your model, okay? You might not use that. You might love to use previous days highs and lows, okay? So you can do that as well, okay? It's not necessary that you have to use every single thing. For example, if you are using this right now, you don't actually need to use previous days highs and lows. If you are using previous days highs and lows, you don't actually need to use the previous session highs and lows. And if you are using uh, weeks highs and lows, previous weeks, you don't necessarily need to use these other liquidity pools, okay? So keep your trading as simple as possible, okay? That will really help you, okay? So I guess it's clear. Now we can move on to our next topic, which is order flow, and I'm not gonna go over details of order flow today. I will discuss it in detail in tomorrow's lesson, okay? So in this lesson, I'm not gonna overwhelm you with a lot of knowledge in just one lesson, okay? So basics of order flow now, and then the rest will be discussed tomorrow, okay? So okay, let me open it up. All right, so now this right now, please be focused on this one because this is very important. Okay, this order flow is very important. This is what's actually gonna tell you where the market is gonna head. Okay, so if you don't understand order flow, you will really struggle. You will really struggle in ICT concepts. Okay, so what's order flow? Okay, basically you can say it's trend, okay? Trend, okay? For example, price is doing something like this, it's moving lower. We can say that this is bearish order flow, but it's a bit more technical, okay? I mean, we have to define it by something, okay? And if price is doing something like this, then that means that we are in a bullish order flow. It's an uptrend. Now, how to identify order flow? So for example, if price is getting into bearish PD arrays, okay, now I explained what PD arrays are, okay? So if price is getting into bearish PD arrays, for example, it gets into a fair value gap and then moves lower. Price gets into breaker blocks and move lower. Price gets into like order blocks like this and then continues lower. That means that the order flow is bearish, okay? I'm going to show you examples as well. And one more thing, a price takes out highs, okay? For example, price takes out a high and then reject lower with displacement. That also suggests that the order flow is bearish, okay? Now, for bullish order flow, it's exactly the opposite. So price is getting into bullish PD arrays and then continuing higher. That will suggest that the market is in a bullish order flow, okay? And we can then expect higher prices. And if price takes out a low and rejects, with displacement, okay, then we can say that the order flow is actually bullish and we can expect the market to run higher. Now, this is way too important. So, if price is in a bearish order flow, it doesn't make sense to short the market. Okay, it doesn't make sense to short the market. Okay, so sorry, if price is in a bearish order flow, it doesn't make sense to long the market. All you have to do is to wait for the market to retrace, and once price shows reactions, shows some signs that the market is turning bearish again after the retracement, that's why you will look for sell position. Basically, you will wait for retracements and then sell there. Okay, that's what you are going to do in bearish order flow. And in a bullish order flow, you will not short. Okay, all you have to do is to wait for retracement to the downside, and then you can look for buying opportunity right here. You can look for buying opportunity right here. You can look for buying opportunity once price takes out a low and then expands higher. Okay, that's how you are gonna trade. That's how you are gonna expect where the market is gonna head. Now I'm gonna show you how. Okay, and for example, have a look at this right now. This is the Euro USD chart, right? So price took out a high, then you can see price got into this fair value gap, rejected lower. Price took out a high, rejected lower. Then price took out a high, rejected lower again, and here it got into this order block as well. Here it got into this order block. Okay, here it got into this fair value gap. Here it gets into this order block. Okay, so this suggests that the order flow is bearish. And if you might see my Twitter profile, you know that I was bearish all along this rally right here, and I'm still bearish right now. Why? Because the order flow is bearish. So it doesn't make sense for me to expect higher prices. Now, market can retrace, okay? It can retrace like this, but we don't want to participate in these retracement phases. Rather, we should wait for the market for the retracement to be over, and then we can participate in this zone right here. So we should avoid the retracements, and we should look at the order flow. So if order flow is bearish, we can expect bearish prices. So right now, you can clearly see the order flow is bearish. Why? Because it is getting into bearish PDRAs and rejecting lower. It's taking out highs and rejecting lower with displacement. So that suggests that the order flow is bearish. So in this case, we will expect lower prices. Okay, we are not going to expect higher prices. Now, the order flow can change as well. We can be wrong at some points. Okay, so a price does this and then starts to respect bullish PDRAs, then we can actually switch our bias and then we can get bullish. But as of now, there's no sign of it reversing. So in this case, we can just look for lower prices. So every retracement is actually an opportunity to short the market. That's how you should be doing. Here, in this right here, you can see that the order flow is bullish in this case. Okay, price made a market structure shift, got into a fair value gap, went higher, then right here as well, it's in this fair value gap, then went higher. So here we can expect the market to run highs. We can expect the market to go higher. Now, if you are bullish right here, you have got wrong. You can get wrong. You can never be right 100% of the time. But then after you see this price action right here,
1 minute.
you will
Can you
get
go
it
back
right.
to that that bullish example? Back to that chart.
Right here?
Yeah, right there. You were talking about a fair value gap, right? It came to that fair value gap.
Yeah, right here.
Where is it?
There, you can see it right.
Okay, this one, but it went here, right? I'm asking.
Yeah, yeah, it's okay. It can go lower, but you can still see that price got support from this right here and then went
Okay,
high.
not the candle. So
Okay, now it's
candle
okay.
close.
it's okay. Even if it closes the candle, now that's not a good sign, but still, it sometimes happens. For example, in this case right here, you can see that the candle closed lower, which actually isn't really good, but you can kind of see this is consolidation. Okay, I will go over
Okay.
these stairs, okay? But
Okay.
it's not really good. We should expect this kind of reaction, okay, if we are bullish, but still, okay, this can be because of various reasons. Now, this was actually because there was NFP news, okay? That's why
Okay.
the market was kind of in a insane kind of conditions. That's why. But it can
Okay.
happen, okay? And
Okay, bro.
it's okay. It's okay if one parallel gaps doesn't get respected. It can happen, as I've told you, that it's not gonna have like 100% success rate or 100% accuracy, and whatever I'm gonna teach is not gonna have like 100% accuracy. Okay, so
Bro, one thing.
but
If
uh,
it gets respected,
okay,
does it respect the wick? I mean, wick. You get what I'm saying?
yeah.
If it get
So
respected, will the wick go below the PDRAs? I'm asking.
yeah, it's okay. I mean, it can wick, but
But candle
order
won't go
blocks,
down.
yeah, order blocks shouldn't be breached. Now, order
Okay.
blocks
Okay.
like order blocks, for example, this is an order block. Now, you
Yeah.
shouldn't see the price going lower, like even a wick. Okay, you
Okay.
should
Okay. I get
expect
it.
the market to
I get
not
it.
breach it. Okay, all right.
Okay.
So,
Thank you.
okay, so I was in order flow, right? Now, now that's why lower time frame. Yeah, exactly. That's literally how it is. So in this right here, okay, this retracement phase. Now I'm not gonna go in very detail right now. I'm gonna go over it tomorrow, but just generally I'm saying that in this retracement right here, we will see that the low time frame order flow is gonna be bullish, and we are getting it right, okay? So the order flow is gonna be bullish on the low time frame. So if I open the M5 or the M15 chart in these three candles, okay, you will see that the order flow is going to be bullish, okay? But what we actually have to do is to wait for that order flow to get bearish as well, okay? We have to wait for that. And once that happens, then we can look for sales. I mean, we don't have to participate in these retracement phases because if we try to sell it right here and continue selling it to this high, that's really gonna get us wrecked, okay? It's not what we have to do, okay? We always have to wait for order flow on every time frame to get in sync. But I'm not going over it in very detail, okay? So I will define it to you. I will explain to you tomorrow actually, okay? But for now, we are just like studying order flow, okay? So right now, this is example of bullish order flow. Why? Because price is getting into order blocks, price is getting into fair value gaps, and you can see this wasn't respected, but this right here, this is an order block as well. This was respected. Price got into this order block, then went up, then retraced lower, and then continued higher. Okay, so now this is the daily chart. As I've told you that every time frame is literally gonna be the same. Okay, so in consolidations, price is gonna be confusing, but in trending days like these, okay, price is really gonna be clean. So now let me get into 1 minute chart. Okay, now this is consolidation. All of this is literally so crappy. We are not gonna participate in such markets. Okay, price was really stupid in this last week. Okay, the price action was way too stupid. But have a look right here. Price takes out low, makes some market structure shift, takes out a low, expands higher. Now, what does this indicate? This indicates that the price is getting into bullish order flow, right? So it took out low and expanded higher. Then once again, price takes out a low, gets into this fair value gap, expand higher. Here, price gets into the order block, expands higher, takes out a low, expands higher. And you can see this throughout all this, and then it starts to consolidate. But have a look, the order flow is literally the same as I like showed you on the daily chart. So it's all literally the same signatures. It's getting into PDRAs, it's taking out lows and then going higher. Okay, so the signatures are the same. Now if I go into 1 hour chart, it's also going to be like same. Okay, for example, now this is consolidation, so I'm not really gonna go over consolidations right now. Let me explain it with some trending market. So have a look right here. This is consolidation. Here, price retraces. So in this space right here, we have bullish order flow. Okay. In this space right here, we have bearish order flow. Why? Because first it was in consolidation, then it got into this fair value gap, rejected lower. Then again, it takes out this high and then gets into this fair value gap, rejects lower. Then it moves up, takes out this high, then rejects lower. Then now it is in consolidation. But you can still see that in this retracement, I mean this up movement, the order flow is bullish on the 1 hour chart. Okay, so you can see those signatures, price getting into fair value gaps, price taking out lows, rejecting higher. Okay, it's literally the same. Even if you open up a seconds chart, it's still gonna be the same. It's gonna be no different. So right here, bearish order flow. Right here, bullish order flow. Then consolidation, bearish order flow, bullish order flow, bearish order flow. Okay, now this right here, this is a bullish order flow. But on the higher time frame, it's just going to be a retracement. So this is 25th August. So if I go into 25th August, okay, right here, okay, you can see that 1 hour order flow is bullish. But this order flow, this was actually just a retracement in the bearish order flow. Okay, so high time frame, on the high time frame, it's going to look like retracement, but on the low time frame, it's going to look opposite to that high time frame order flow. So high time frame order flow is bearish, but the low time frame order flow is bullish. Okay, so tomorrow I'm going to go in detail of these things and how we actually confirm if price is now going to retrace, price is now going to expand towards the order flow side. Okay, ERL to IRL, is that order flow as well? No, it's just a retracement actually. Okay, that's because, okay, like this. Okay, let's say price takes out a high. Now there's going to be a fair value gap, which is the internal range liquidity. Now have a look at this order flow right here. It's actually bullish, right? So if price gets into this IRL, that means that this was just a retracement, and the price will maybe continue higher after this. Okay, the same goes for in a bearish case. Okay, so there's a clear bearish order flow, right? You can see it takes out external range, then gets into a fair value gap. Now, for those who don't understand external or internal range, I will go over that as well. Okay, you don't have to worry about that. Okay, so this is actually ERL to IRL is actually a retracement. That's not order flow. Order flow is this. This is the order flow. It's bullish right now, and this right here is just a retracement. Okay, so I hope that's clear. Now this is, you can see Euro USD. Now let me get into another market and literally show you the same stuff there as well. So now this is NQ, right? It's daily chart. You can see that the order flow right here is bearish. Okay, you can clearly see that it's bearish. Okay, why? Price takes out highs, reject lower. Okay, price gets into PD arrays, bearish PD arrays, and then reject lower. In this case, the order flow is bullish. Okay, let me open clean chart. So in all this space, the order flow is bullish. In this case, it's bearish right now. Now this bearish order flow might seem like a retracement on the higher time frame. So if I go into a monthly chart, you can see that this is actually just a retracement. But on the low time frame, it looks like bearish order flow. So we are in a bullish order flow, and then this is just retracement. MSS, okay, let me do that. Okay, so let's say price is heading lower. We're gonna have these highs and lows, right? Okay, price takes out lows, then displaces over this. So that means it's a market structure shift. But okay, this can actually, I don't recommend trading market structure shifts. Okay, I don't recommend that. Why? Because this is a bearish order flow, right? Now, this can just be like a red on a short-term high. This can just be a red on a high. Okay, I'm not getting into short-term highs and lows right now. Okay, this can just be a red on a high. Like it's one of the signature of a bearish order flow. It's gonna take out high and then reject lower. So I don't actually recommend market structure shift, but this is actually what a market structure shift is. So price is making higher lows and lower highs, okay? And then price displaces over a high. This is what a market structure shift is, okay? And I'll get into detail of every single thing. Trust me, I'm gonna give you like a complete trading model. You won't have any confusions left, okay? You don't have to worry. I will clear up all these things related to structure, related to order flow, related to the ERL, IRL stuff, okay? What more is there? The market maker buy and sell models, okay? And what else is there? The entry models. So you don't have to worry. I will cover all these things up. We have like 11 days, so it's enough for completing all those stuff, okay? So just don't rush stuff, okay? Just it is a slow process. Trading is actually a slow process, and the learning should also happen slowly. You try to rush things up, it's really gonna mess your own trading. Okay, you're just gonna lose money. You will not be able to learn properly. Okay, so just don't rush stuff up. Rest. Everything is gonna be okay. I'm gonna teach you every single thing. Okay. So now, right now, this is monthly chart, and you can still see those same signatures happening again. Okay, price takes out a low, moves higher. Price takes out a low, moves higher. Takes out a low, gets into order block, moves higher. Same here, takes out a low, moves higher. So that's literally how order flow is defined. Okay, that's how we define. If it's any time frame, it's going to be defined the same. Okay, so you can see that there is a bullish order flow. So is it wise to sell in a bullish order flow? Absolutely not. Okay. Now, do you know what most of the ICT students do and why do they fail? Okay. It's actually because they don't have understanding of order flow. So the market is going to be in a bearish trend. And what they actually are going to do, okay, so these retracements are not going to be too big, okay, they are going to be small. And then the market is going to expand lower in a bearish order flow. So what they actually do is that, look, let's say this is the daily order flow. They're going to get into the 1 minute chart right here. And they will see market structure shifts in here, 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 here. And they will buy. They will buy in those market structure shifts. And that's most likely gonna fail, okay? In a bearish order flow, all you have to do is to look for sells. So if you look for market structure shifts to the upside, then you really are gonna fail. So all they do is they try to catch reversals. They try to pick the bottoms, which is kind of not something we should do. So if you try to long right here, so and you definitely will have your stop loss right here, of course, okay? Sorry, your target right here. Is that going to reach? No, it's definitely not going to be. Then they are going to buy right here, they're going to buy right here, they're going to buy right here, and they're going to have this target set highs, right? And that's not going to work. What actually is going to work, okay, now have a look at this. Let's say this is the higher time frame. Wait, okay. And so have a look at this, right? This is how the lower time frame is going to look like. Then we are going to have another retracement. Then it's going to move lower again. This is how this high time frame chart is going to look like on the low time frame. So imagine it's a bearish order flow and you buy from this market structure shift and you target higher. You are of course going to get wrecked. you are gonna do the same right here as well. If you just trade market structure shifts, then and you are gonna have your stop loss target at this time, most likely. Okay. You are gonna look for another market structure shift right here as well. And you will buy from that, but it will eventually go lower than. And if you trade with the order flow, for example, you are gonna wait for bearish market structure shifts, let's say. So this is a bearish market structure shift. If you short it right here and target lows, first of all, these lows are gonna be taken out. There can be liquidity at the left side more, so you can target that as well. Okay, and you can be part of expansions. Okay, right here, for example, you sell it right here. So that's how literally you want to do it. That's how you want to do it. You don't want to long in these retracements. You are most likely going to fail. Okay. So this is how the market actually works. Now, this is all for this lesson. Now, let me know if you guys have any questions. I will answer them up. Okay. And if it's not clear, you can let me know. Is it clear? Okay, so anyone else having any problem? Well, now it actually depends on you. It actually depends on what kind of person you are. Okay, so for example, if you are someone that cannot hold trades for too long, okay, and they panic, you should be trading on the M1 or M5. So in that case, you should be looking at the daily order flow or the weekly order flow, and then M15 order flow. But if you are someone who want to trade on the M15, then you should be looking at the 4-hour order flow and the weekly order flow. Okay. If you are someone who wants to trade on the 1-hour chart, then you must look at the order flow of the daily chart and the order flow of the monthly chart. So that's how you want to do it. Now it totally depends on you. Make sure and follow. Thank you, bro. Yeah, I'll recommend that. I do post a good stuff there. So they are pretty educational, to be honest. Daily H1 M5, that's a good model. Okay. I basically use H4, M15, M1. So it totally depends on what kind of person you are. Now I cannot hold trades for too long. That's why I just trade on M1. Let me just do a quick recap of my trade, okay? Wait, I'll open this up in another. And trust me, I'll teach every single thing about how I trade. What things do I use, okay? Every single thing. How I get my bias, how I know where the market might head, literally every single thing. Okay, there's something wrong with Twitter. It's not loading my tweets for some reason. Let me see if it's right on the phone. Not, it's working on the phone, but there's some problem on the browser. Let me try here. I don't know what that problem is. Okay. How long is this, man? How many days per week? Okay, so it's gonna be 3 days a week, okay, and it's gonna continue for 4 weeks, okay. And in that 4 weeks, I'll literally I will literally teach every single thing, okay, every single thing about how I trade. I don't know what is wrong with Twitter. It's not working. Wait. By the way, can you guys hear me? Is it some problem with my internet? Okay, great. I thought something is wrong with my internet. I'll try to open these images, maybe. Okay. These trade images, if I can. And in my Twitter profile, you should go into the highlights. Okay, so there's a section, there is post, replies, and highlights. In that highlights, you are going to find a lot of good stuff. Okay, I will show you how I use these order flows, highs and lows, etc. It's actually what I use. I have to open this up to my WhatsApp. Okay, so wait, let me open the others as well. Okay, so right now, the first thing that I have to look at is order flow. So no, everything else is working correctly and it's working right on my phone as well, Twitter. But something is wrong with the browser, maybe. I checked it on phone, it's working correctly. I'm connected to the same network on my phone as well. Okay. So the first thing we actually use is we have to look at is order flow, right? So in this case, we have a clear bearish order flow. Now, let me open that up in TradingView once again. Okay. I closed it by mistake. So remember, I told you, you don't want to participate in the retracements. In the retracement phases, you will see crappy price action like this. You can kind of see how it's consolidation type up. It's moving upwards, but it's still consolidating a lot. Look at all this price action and look at all this right here. And this is literally like the 4-hour chart. So imagine trading right here. It's really gonna mess your mind up, right? Okay. So if I go into a daily chart, okay, you can clearly see the order flow is bearish, right? So the order flow is bearish. Now I'm gonna look for sells in this case, right? So price, the retracement ended, price got into a weekly fair value gap, made a market structure shift, okay? Then it got into this 4-hour order block, okay? Now I have to go into the 15-minute chart. So when I got into the 15-minute chart, this is that 4-hour order block line. This is that M15 breaker. Okay, so price tap that. Then look at this. This is the classic ICT AMD cycle, right? So price got into an M15 breaker. It is that breaker right here. Okay, here was consolidation. So this is accumulation, this is manipulation, and then this is distribution lower. Okay, so I entered right here, got a partial at these lows, and I was targeting for this right here, but after price took out these lows, okay, I got a partial and moved my stop loss to break even. Sorry, at this high right here, and then my stop loss was hit. So I secured like 2.5 power, I guess, on this trade. Okay, so you can clearly see how I use order flow, etc., and then I use structure, etc., as well. Now I will teach you about structure as well. Thank you, Andrew. Yeah, it is a clean one. Okay, I have another example as well. I hope it opens up this time. Yeah, that's stupid as hell. I guess I have to send it to my WhatsApp and then do that thing again. Once you, okay, so Andrew said that this is a clean trade. That's basically because there were a lot of confluences. So when you actually wait for these confluences, these best setups, okay, you are gonna find these clean trades, okay. Why? First of all, I was trading with the order flow. Second, I waited for retracement to be over. So this was in a bullish order flow, I mean in a retracement. I waited for this retracement to be over. Price made a market structure shift with displacement, so that suggests that this 4-hour retracement is now over. Okay, this 4-hour retracement is over. Then I waited for the market to get into the 4-hour order block, and in that 4-hour order block, price tapped a breaker, and then you can see this accumulation, manipulation, and the manipulation happens before the 3 a.m. After the 2 a.m. time. Okay, sorry, that isn't a pretty great example of time. Okay, but I don't know, there was some news or something right here. I don't really remember, but you can clearly see a very clean accumulation, manipulation, distribution cycle right here. Okay, now let me open that other example. That now I'm gonna go into the chart with the same bias. Okay, uh, it's so hard right now opening these pictures. I have to save them and then I don't know what the hell happened to Twitter. Okay, whatever. And no need to rush here. You just need one of these trades a week to pass. Exactly. You just need to, you don't have to trade every single day. You don't have to trade every single session. One trade a day is enough. And I would say one high probability trade a week is also enough. Now it depends on every person. Some people love to trade more, some people love to trade less. Okay. Now that's like a choice, but to be honest, the people who trade less are more successful than those who trade more. Okay. Okay, right here, with that same bearish bias and looking at the order flow, etc., I'm again here shorting the market. So you can see that price was at this order block, then price got into this inversion fair value gap. Okay, now if you don't know inversion fair value gap, let me explain that. So let's say this is a bullish fair value gap right here. Technically, price should get support from here, but if price fails to get support from here and it is violated like this, you can see how price closed with displacement from this. Now this can be used as a resistance. So this is inversion fair value gap. Okay, so this was for our chart. Price got into that inversion fair value gap. Okay, you can clearly see that inversion fair value gap marked out right here. Then there was this high as well. So it got into the 4-hour inversion fair value gap. It did a red on the short-term high. Now this is the 1-minute chart. So first of all, we see a market structure shift. Then we clearly see a down movement. Then price gets into this order block and price takes out this high. Now this is going to be explained in the structure lesson, which I'm going to go over. Okay, so price takes out a high, then rejects lower. This is one of my entry model actually. So I just enter right here, placing my stop loss at this high, barely missed it. And then after that, this was my first target, this was my second target. and there was 8:30 a.m. news as well. So news got hit my TPs, both of my TPs. So you can kind of see that when you wait for the high probable setups, how clean they actually are. So this trade literally just took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 minutes. So 11 minutes and I got like 3 or something like that. 3 or 2, I don't actually remember. I got something like that, okay, from this trade. So that's how you should be doing it. You shouldn't be rushing things. You should be waiting for the highest probability trades. You should be trading with the order flow. And when you do that, you will catch trades like these, clean trades like these. Okay. So guess this is it for today. Now I'm asking you once again if there is some confusion, you can still ask me and I'm ready to answer. The stream can go on as long as you can ask questions. Okay. You're welcome, Edie. Next class is gonna be tomorrow at 12:30 p.m. EST, same time, okay? Thank you, Andrew. Whole mentorship is gonna be like this, okay? You can ask whatever you want, and the stream is gonna go on until all of your confusions are cleared, okay? So you're welcome, okay? You're welcome. All right, so I guess everything's clear. I'll say goodbye to everyone. Have a good night, day, whatever time that is. Good night.